What's happening to the markets right now? Markets are crashing. As you know, major indexes are down anywhere between 15 to 25% from market highs. But don't worry, if you're doing the defined outcome approaches we have recommended for some time, you're going to be okay. But it doesn't feel that way. So let's walk through how this works. So in a equity allocation, let's just say you have 60% equity allocation in your portfolio. A defined outcome approach is you would have about 1/3 in each of three strategies. Now, the first third is what you're seeing here on the screen, what we call naked in the market. Now, naked in the market, you are seeing a crash right now. Your values are down and it doesn't feel good. But remember this by design, we're going to stay on this roller coaster ride. And at strategic points that we hit on the market crash, we are going to buy some of the dip. So hopefully profit from this. But where do you get money to buy the dip when the markets are crashing? And what if they crash further? Well, that's where the other two sections come in. So there's two defined outcome approach that give you protection on your portfolio. And there's a third that is a fixed income approach. So the first approach is what we call a target strategy. Now, the target strategy, our foundational funds target 80% of the upside of the market. And in a down market, the goal is break even plus or minus 1 to 2%. Now, this money will have money coming due regularly. So every quarter, if not month, there's money coming due. So if the markets are down, you get a zero, but you get to buy the dip. So that is a opportunity to make money long run, because the whole idea of stock market investing is to buy low and sell high. So systematically, we'll be buying the dip. And even though the naked in the market portion of your portfolio is down, you should smile, because this could be an opportunity to make a lot of money as a recovery occurs in the coming months or year or however long this market takes to kind of hit bottom. Now, so the target strategy is great. That's going to do well for us. And then we have the cap strategy. Now, the capped or buffer strategy is where we give up some upside. So we might only get 13, 14, 15% of the S&P 500 as an example. So those are priced daily. It depends on the market conditions when we bought them. But in return, the one we've been using for some time now, we will get 5% of losses. And then the next 30% of losses in the S&P, we will lose nothing. So you're hedged or protected on the downside. So between the target strategies and the cap strategies, 2/3 or roughly 60 to 75% of your portfolio can be protected. And that's how our clients are kind of weathering these storms. Now, we do have a fixed income strategy tied to the market also. And that's important right now because fixed index annuities, which are a form of a volatility buffer, they will get a zero in down markets when they're crashing like this if the index is tied to the S&P or the NASDAQ as an example. Now, a zero can be your hero when the markets are down, because if we have money coming due, and again, we get to buy the index again when it matures, and let's say the markets are lower, we then get to ride the market up, but we weren't there for the losses. So three key strategies: the target, the capped or buffered strategy, and then the volatility buffers with fixed index annuities can protect your portfolio right now. And then, of course, we have your traditional, which would be other fixed income assets like high quality bonds. There's a flight to safety now, so those bonds are protecting you in your portfolio also. So the key is don't panic in a market like this. If you don't have the protections we're talking about in your portfolio yet, reach out. We'll show you some strategies to incorporate them in midstream. And if you already have them in your portfolio, you're in good shape, and you might even want to smile because you're about to be able to buy stocks while they're on sale. So I hope this was helpful. Please share this. If you have any comments or questions, reach out. We are here to help, because I know it's no fun in a down market. So have a great day, and I'll be talking to you next time. Thanks.